Good morning and welcome to today's Monday morning mortgage update. My name is Sean Woland with the Woland Mortgage team here at Waterstone Mortgage. And if you are hopping on here to see the recorded version, you can always go to www.mondaymortgageupdate.com to see the latest and greatest update for the week. And then next week, which is Cinco de Mayo, we're going to have a special guest. Rick Whitstock with IPX is going to be talking to us about reverse 1031 exchanges. So you won't want to miss that. So let's jump right in to kind of see what the markets are doing. And let's talk first on something near and dear to me, zero money down. So I have a lot of zero down programs. I would consider myself a zero down specialist. So let's jump in to see what those programs look like. And first off, we have the zero down powerhouse conventional loan. That is one loan up to $806,500. So that's conventional loan limits. It is a great loan. Rates right now are actually phenomenal. They're at 6.75 with no points right now on a zero down powerhouse conventional loan. 806,000 with zero down, guys. Pretty cool. We also have a zero down jumbo. This is incredible. You can actually finance closing costs, and it's up to 1.2 million. Now, this is a 20-year amortization loan, so it's a little unique, but it is another great zero down option. We also have the physician's loan, zero down up to $1 million. It's a zero downs, just keep coming, guys. We also have our in-house zero down FHA. Now, this is not a down payment assistance through any county or city or state, your municipal system. This is our own internal zero down FHA loan, follows normal FHA rules. It is a fantastic loan as well. Also, a zero down first responders up to 100% financing up to the conventional loan limits. And of course, the normal DPA programs, we do those up to 806. Those just follow conventional and also FHA on the normal DPA programs that are available county to county and state to state. And don't forget our zero down VA loans, which are normally zero down, but we don't have a limit. Some lenders do. You can do zero down even up to like 2 million. It's wild. So zerodownpurchase.com is a domain name that I have because I am a zero down specialist. So don't forget that. So let's dive right in to see what the markets are doing, because it was a wild swing a couple weeks ago. We had a big trough that we jumped into on the Fannie Mae 30-year bond. We lost a lot of ground. Now, we gained some of that back. We lost a little bit at the end of last week, but then in the beginning of last week, but then we grew back. We gained back some ground, and we started the upswing. And today we are just above this Fibonacci level. So actually, this is the 50-day moving average, just above this 50-day moving average, which is quite it's very obvious that we're just sticking right to this. Now, we have to jump through this next Fibonacci level to see some real gains. So we're right above it right here. Looks like we tried to go below it, but we're above it for now. So let's hopefully keep your fingers crossed that we continue to push this forward so we can get better rates as we go through the week. But it's a great little pattern here. We saw a lot of growth or gains last week. So beginning of the week, not so much, but we saw a pretty big fall, but we gained all of that back and then some, which is always a good thing. So what's the 10-year looking like? Well, we when the 10-year goes down, rates go down, right? So the 10-year, we saw it go up early on Monday, and then we saw it come down for the remainder of the week, and we kind of touched right on the 200-day moving average. Lost a little ground today, but we stopped on I believe that's the 25-day moving average. Yep. And we're bouncing back off of that. So I think it's a good pattern here. We're going to see hopefully some better rates as we go through the week. We're in the 7s on rates right now, which isn't the best, but it's better than it has been. And we should have a good week ahead of us. So what's going on with the markets? Because this is a very big week. We have a lot going on. Now today, as you're probably watching this, I'm going to be at the dentist. So I am getting a crown on a tooth that I broke this weekend. Yes, it's the worst thing ever, but hey, it is what it is. Tuesday, We have the Case-Shiller home price indices coming out. It's going to be interesting to see. And the job openings report is coming out as well, the JOLTS report. And then consumer confidence, which has been rather weak lately, is going to be coming out. So we may see some rate improvements tomorrow because of this. We'll have to see how the JOLTS report is, because jobs are very important, especially to the Feds, because it's going to be a major factor in their decision to cut the Fed funds rate coming up. Wednesday is a big day. Look at all that's going on. We've got payroll through ADP. We've got PCE coming out. We have the year over year, the month over month. We have personal spending. We have personal income. We have the CPE. We have a lot happening. The gross GDP is coming out. So Wednesday is going to be a very, very volatile day. We're going to really watch that carefully as we go through to Wednesday. But overall, it looks like our economy is a little slow. It's been rather weak. It's kind of been held up with a house of cards, lots of government spending, lots of government jobs. Right now, we're cutting a little bit of those jobs, as you know, through DOGE. So the growth of employment isn't as great. We'll see what the private sector has to put forward as far as the job openings report. And we'll see what GDP is. It's supposed to be pretty low. So if that comes in low, we're going to be looking at some potential rate improvements. If PCE, if inflation comes in hot, that could lead to rates going up. So it's going to be a really interesting day on Wednesday. Thursday, we have the Bank of Japan kind of going over what they're going to be doing with their rates. We have initial jobless claims, job cuts, continual jobless claims, manufacturing and construction spending. And then Friday, we have the unemployment rate that's going to be coming out. Non-farm payrolls are coming. We've got factory orders coming in as well. So we'll see how the tariffs are impacting the factory orders. So overall, starting on Wednesday, it's going to be a pretty, I guess Tuesday, we got the job openings report. It's going to be a rather wild week. So I expect rates to be, bounce around in the 6s to the 7s for a little while. We're going to have to see some real big, meaningful numbers come out to show weakness in the economy, weakness in the GDP, for us to really see some major gains. But I do know that rates should be lower in the future. It's just never in a straight line lower, and it's going to be interesting to see as we go through the week. So I want to thank you all for helping my team become top 1% of the country again. And so that was very, very kind of all of your referrals. So I appreciate that very much. We take our job very seriously. We're very passionate. And if you ever need anything, feel free to call me anytime. I'm going to head out to the dentist now. So you all have a wonderful week, and we will be in touch. Talk to you guys soon.